Hey there, Geek fam. It's your girl, Crypto Geek Girl, back with a full market breakdown. Let's talk about where smart money is actually moving in the next 12 months. Not just hype, not just social media noise, but real data-backed opportunities across gold, silver, crypto, and the stock market. I'll tell you where I'd be putting my money right now to outperform in the next year, and why. This is the kind of insight that separates the investors who follow trends from the ones who get ahead of them. Before we start, this is not financial advice, just my market analysis and how I see the market unfolding over the next year. It is always best to do your own research. So let's dive in. Gold, the silent power play. Gold isn't exciting, it doesn't have the flash of crypto or the innovation of tech stocks, but it's doing something powerful, quietly reasserting itself as the ultimate safe haven asset. Central banks are loading up like never before. We're talking record levels of gold accumulation, led by China, Russia, and the BRICS nations. They're moving away from US dollar dependence, and gold is the neutral asset they all agree on. And now, with the Federal Reserve expected to cut interest rates again this October, the dollar could soften, which historically gives gold a major lift. Right now, today, 13 October 2025, gold sits around $4,110 per ounce, which is a new all-time high altogether. If institutional inflows resume through ETFs, the price of gold can keep climbing higher. What's interesting is that gold's not just a hedge against inflation anymore. It's becoming a hedge against systemic uncertainty. From geopolitical tensions to banking volatility, gold is regaining relevance. For me, gold isn't about chasing profit. It's about preserving purchasing power while the world resets its financial footing. Silver is the industrial underdog. Now, let's talk about silver, the metal that always plays catch-up until it doesn't. Silver is both a precious and industrial metal, which gives it a dual engine of demand. On one side, investors buy it as an inflation hedge. On the other, industries need it for the clean energy transition. It's in solar panels, electric vehicles, semiconductors, and even medical tech. And here's the catch. Mining output is struggling to keep up. Supply is tightening just as industrial demand rises. The gold-to-silver ratio right now is sitting around 80-1, which is historically extreme. That means silver is undervalued relative to gold. Silver has broken above $50 per ounce. It seems to be well on track to go to $75 per ounce, or even double by early next year. That's a potential 50 to 100% upside. Silver is volatile, yes, but it's also the hidden leverage play inside the precious metals sector. If gold is the foundation of your defensive portfolio, silver is your tactical upside weapon. Okay, let's move into my favorite playground, crypto. The last 12 months have been a slow build. Regulatory clarity has improved, institutional players are quietly accumulating, and we're now entering what I call the smart money phase. This is where the whales buy while the crowd gets bored. The real shift is coming from ETFs, especially XRP and Bitcoin ETFs. We're watching traditional finance finally open the door for pension funds, 401ks, and corporate treasuries to buy crypto directly through regulated channels. That's huge. Now, if you zoom out, the setup for the next bull phase is aligning perfectly. We've got a Federal Reserve rate cut coming mid-October, ETF approvals expected within weeks, Ripple's banking license in motion, and the Ripple Swell Conference, all lining up in what's now being called Uptober. So let's look at where the opportunities lie. First up, XRP, the institutional catalyst. This one is front and center right now because of the ETF filings and the regulatory clarity Ripple achieved after its legal win against the SEC. Granite Shares has already filed for both 3 times long and 3 times short XRP ETFs, meaning institutional traders are preparing to amplify exposure on both sides of the trade. If any of these ETFs get approved, it gives traditional finance its first regulated pathway into XRP. That means big money, pension funds, corporate treasuries, and even government-backed entities could legally allocate to XRP for the first time. Combine that with Ripple's expansion into cross-border payments, tokenization, and partnerships with global banks, and XRP becomes more than a cryptocurrency. It's turning into infrastructure for the next generation of finance. If this narrative holds, XRP could become the regulated bridge between crypto and institutional liquidity. Bitcoin, the macro anchor. Next, we can't ignore Bitcoin. It's still the reserve asset of the digital economy. the foundation of everything else in crypto. The spot Bitcoin ETFs have changed the game, bringing billions in daily volume and introducing a new class of investors to the market. With rate cuts on the horizon and inflation still lurking, Bitcoin is positioned again as digital gold. No, it won't do 100x from here, but it remains the anchor, the macro hedge, the asset that gives credibility to everything built around it. Bitcoin dominance will likely stay strong until mid-2026, before capital starts flowing deeper into altcoins again. So, if you want exposure to crypto with lower volatility, Bitcoin is still the core holding to build around. Ethereum, the smart contract empire. Now let's talk about Ethereum, the foundation of decentralized finance, NFTs, and on-chain infrastructure. Ethereum has proven its staying power. With Layer 2 scaling solutions like Arbitrum, Optimism, and Base expanding rapidly, ETH is finally solving its biggest weaknesses: high fees and slow transactions. The next upgrades are focused on efficiency, making Ethereum faster, lighter, and more scalable. As institutions move into on-chain finance and tokenization, Ethereum's compliance-ready frameworks and deep liquidity make it the default platform for regulated Web3 development. So while ETH may look slow compared to newer blockchains, it's quietly evolving into the settlement layer for global finance. If the next bull run is about legitimacy and infrastructure, Ethereum is at the center of it. Solana, the speed demon. Solana is the comeback story of the last 2 years. After the FTX collapse, many wrote it off, but Solana rebuilt faster than anyone expected, and now it's processing millions of transactions per day across DeFi, NFTs, and gaming. Its transaction speeds and low costs are attracting developers from Ethereum and other ecosystems. Even major institutions like Visa and Shopify have begun experimenting with Solana's infrastructure. Yes, it had reliability issues in the past, but if Solana continues to stabilize, it could emerge as the blockchain that actually delivers mainstream usability. Think of Solana as the Apple experience of crypto: sleek, fast, and easy for developers and users alike. Next is Chainlink, the data backbone, also the unsung hero of DeFi. Chainlink connects smart contracts to real-world data like prices, APIs, and payment systems. Without it, most decentralized apps wouldn't function. But what's really exciting is Chainlink's new protocol, CCIP, the Cross-Chain Interoperability Protocol. It's building a network where banks, financial institutions, and blockchains can share data and value seamlessly. As tokenized assets become mainstream, Chainlink becomes the bridge between traditional markets and decentralized networks. If tokenization turns into a trillion-dollar trend, Chainlink is positioned right at the center of it. The Layer 2 revolution, Arbitrum and Optimism. Layer 2 networks like Arbitrum and Optimism are the silent giants of Ethereum's scaling. They're solving the biggest barrier to adoption, cost and speed, while keeping Ethereum's security. Arbitrum has quietly become one of the largest DeFi ecosystems by total value locked, and Optimism is powering some of Coinbase's on-chain strategies. These aren't speculative meme coins, they're real infrastructure projects with revenue, users, and institutional-grade adoption. Both could perform strongly as real yield and governance functions expand through 2025. And finally, we have the Internet of Blockchains, Cosmos, a project designed to make blockchains talk to each other. Cosmos focuses on interoperability and modularity, two key ingredients for scaling Web3 into the next era. Projects like Osmosis, Injective, and Celestia are all part of the Cosmos ecosystem. Together, they're creating a multi-chain environment where assets and data can move freely between networks. Cosmos might not make headlines every week, but it's building the backbone of a connected blockchain world. If interoperability becomes the next major trend, Cosmos will be one of the biggest beneficiaries. Now let's zoom out from crypto and metals into the stock market and go for quality over quantity. This year isn't about buying the entire index, it's about picking the right sectors. AI and hardware remain unstoppable themes. Nvidia, AMD, and Supermicro continue to dominate the infrastructure side of artificial intelligence. Cybersecurity is another standout. Companies like CrowdStrike and Palo Alto Networks are benefiting from increased defense spending and digital security needs. And as energy transitions accelerate, renewable leaders like NextEra Energy and SolarEdge could see tailwinds once interest rates start falling. Finally, if you want leveraged exposure to metals, the mining sector is your friend. Newmont, Barrick, and First Majestic Silver all stand to gain if gold and silver continue their upward momentum. The strategy here is simple. Prioritize quality, profitability, and exposure to long-term megatrends, not short-term speculation. So here's the takeaway: the crypto geek girl way with smart. Simple, crypto, and investing. Gold and silver give you security, crypto gives you growth and innovation, and select stocks give you exposure to megatrends shaping the real economy. This next year will reward preparation, not reaction. The world is shifting toward a more digital, tokenized, and inflation-sensitive economy. That means the winners will be the assets that combine real-world utility with financial innovation. For me, that's gold, silver, and the crypto infrastructure plays: XRP, Ethereum, Chainlink, Cosmos, and Solana. So, position wisely, stay informed, and remember, this isn't financial advice. It's education and insight, from one geek to another. I'm Crypto Geek Girl, reminding you to stay smart, stay early, and stay geeky.